Welcome back to my channel, ladies and gentlemen. I am so happy, I'm so delighted to welcome you once again to my channel. And for those of you that have subscribed to my channel, thank you very much. I truly appreciate. And I promise you all, I'm not going to disappoint you in this channel. So for those of you that have not subscribed, please do well to subscribe to this channel. Turn on the notification icon so that you'll be notified whenever I drop new video. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. In this channel, I talk about forex trading and the various ways to trade the forex market profitably, right? So that is what I do for a living. I'm a professional forex trader. So ladies and gentlemen, not to waste much of your time, let's dive straight to what we are here for. So in this video, I'm going to be sharing with you a powerful, mind-blowing strategy that I use to trade the forex market, right? So before I talk about that strategy, I have something to say. I have an announcement to make, right? I have an announcement to make. From now henceforth, I am going to be uploading videos once in a week, and that will be every Saturday, right? So every Saturday I will be updating you guys with new educative content pertaining to forex trading. I'm sorry that I cannot update you guys every day because I'm too busy. I have so many projects on my head, right? So trying to make videos every day is going to be difficult for me, and I don't want to rush my content. I want to take our time to create an evergreen content that you guys will enjoy and benefit. That is why I finalized that I'm going to be doing video series every Saturday, where I'm going to be teaching you or coaching you on how to trade the forex market. For my academy, I'm still working on it, and very soon I'm going to start my mentorship program for those of you that truly want me to mentor you in forex trading. But every Saturday I'm going to be updating you guys on this YouTube channel with forex trading strategy. So that is why I advise you to turn on the notification icon. For those of you that have subscribed, turn on the notification icon to be notified whenever I update new content. And for those that have not subscribed, please do well to subscribe so that you don't miss out from our educative content. I hope you understand what I'm talking about. So we are going to be updating you guys every Saturday. Take note. So every Saturday you are going to get new video from me, one video per week. That is how we are going to roll from now henceforth, because from Monday to Friday I'm always busy with projects, right? I'm monitoring the market, and I'm also have some project that I'm running around, so it will be difficult for me to create video for you guys. So that is why I say, okay, let me make use of Saturday, because that is the day that I normally have a spare time. So that is why I picked Saturday. I hope you love the arrangement. So back to business. So many forex traders have been complaining bitterly that they are losing consistently in the forex market. They are losing so much money, right? They are losing so much money. The reason why they are losing so much money is because they don't know how to trade. They have not sat down to train themselves on how to trade. So the question I want to ask you is, how long do you spend on your chart? How long do you spend on your chart? So that is the question I want to ask you. How long do you spend on your chart? Because if you want to be a professional, profitable forex trader, you need to have a pair that you love and focus on it. Forget, I know it depends on the kind of trader you are. If you are a day trader or a scalper, you need to focus on one single pair, on one pair. Don't trade more than one pair. If you're a day trader and a scalper, focus on one pair, right? If you're a beginner, focus on one pair. The people that are trading 5 pair, 6 pair, 7 pair are professional swing traders and position traders. But if you're a day trader and a scalper and you're also a newbie in the business, focus on one pair. Understand everything about that pair. You will know that. Understand everything about that pair, how the pair moves. That is what you need to understand, because the forex market has to do with supply and demand, right? Buying low and selling high, right? You buy when the price is low and sell when the price is high. That is the summary of forex trading. There is no other magic in it. The summary of forex trading is you buy when the price is low and you sell when the price is high. That is it. So the only thing you need to know is to know when the price is high so that you can sell, and to know when the price is low so that you can buy, right? So it's very, very important that you take out time to understand the forex market that you are trading, the current pair that you are trading. Don't be jack of all trade, master of none. Don't say today you are trading Euro USD, tomorrow you are trading GBP USD, next tomorrow you are trading gold, the next day you are trading silver, the next day you are trading oil. Honestly speaking, you are confused. You are totally confused, because there is no way you will learn forex trading. So it is either you pick Euro USD, or you pick gold, or you pick oil, right? Just pick a pair, master that pair, and this particular pair will make you money. Once you know the movement of the pair, you know the movement of the pair, you know when the pair is going up, when the pair is going down, you can be able to make money consistently on that particular pair. So that is why I'm advising you guys, if you're a newbie, please focus on only one pair, right? Like I normally say, I trade only gold, XAUUSD. That is the only pair I've been trading, because I take our time to study this pair. Every Saturday, I normally, go through the chart, right? I go through the chart, I analyze the chart and see some movement so that I can build confidence within myself. I know the particular support and resistance level, and I see price reversing from that area. So it now gives me confidence that when price comes back to this particular area, it will definitely reverse, right? And I go through the chart, I see support level, and I see that when price get there, it reverse. I'll have the confidence that if price get to this level again, it's definitely going to reverse. So when price get there, I'll place my trade. So looking at the chart, backtesting your strategy consistently on the chart gives you confidence. You don't trade on panicking, you trade with confidence. You know your analysis and you focus on that. So that is why it is very important that you stick with only one pair. So today I'm going to be showing you how I trade gold. In all my videos, I've been using TradingView for my analysis, right? Because the main place that I place my trade is the MT5, either the desktop or the mobile. But this time around, I'm going to show you how I trade using the desktop MT5, right? You see how I do my analysis, how I trade. Very simple. I don't stress myself. There are so many strategies to trade the forex market, but if you want to learn all the strategy, you become confused. You'll be filled with too much knowledge that you don't even know the one to apply. That is why whenever I give strategies, I tell you, pick the one that you can master. Pick the one that you can master. It doesn't mean that you should trade all the strategy that I'm giving to you. As I'm talking to you, I'm speaking to millions of people all over the world. So everybody will not have the same style of trading, the same strategy. So that is why I give out so many strategies. So it doesn't mean that one person will just come and try to master all the strategy. It become difficult. So you pick the one that you can backtest. Once you backtest it and you confirm that that strategy is working for you, focus on that strategy. Be consistent with that strategy. Very important. Very, very important. So that is what I want to let you know, right? So not to waste much of your time, we're going to head straight to MT5, my MT5, where I trade gold, right? We're going to head there, so I will show you how I trade the forex market. So ladies and gentlemen, we are now at the MT5 chart, right? So now I want to show you how I trade. This is gold, XAUUSD. So you can see this is XAUUSD, gold against the dollar, the US dollar. So gold is a commodity. Gold is purely a commodity, and the major thing that moves gold is supply and demand. Gold is not like a currency pair. Gold is a commodity, and many people are trading gold, and that is why gold is moving. If you watch, gold trend the most. Gold trend more than ranging. Some forex market range most of the time, but gold trend. If you watch gold, you see that gold has more trending market than ranging market, right? Because gold is moved by what? Supply and demand, right? And this is against the US economy. If there is crisis, if the economy in the US is going down, gold tends to go up because people prefer buying gold. Gold is a national treasury. It's something that people hold on to in form of hedging, holding on to something in terms of crisis, right? So gold goes up when the US economy is down. When there is crisis, gold goes up. But if the US economy starts booming, gold goes down, right? So that is the supply and demand. Whenever I see gold going up, know that the US economy is having challenges, right? Know that they are struggling with challenges, financial challenges in the US. So whenever gold is going down, you know that there is inflation in the US, and there are a lot of things that is affecting the US economy, and that is why gold is going up. So whenever gold is going down, it means the US economy is coming back, is booming. So that is it, pure supply and demand. So you don't need to stress yourself that you want to learn the fundamentals. You can come down to the technical. So when you come down to the technical, what are you looking for? You are looking for movement of the market. And like I said, gold trend the most. So your job as a gold trader is to follow the trend. As a gold trader, your job is to do what? Trade in the direction of the trend. Don't ever trade against the trend, because if gold start moving, every support or resistance level will be broken, right? And like I told you in all my videos, whenever a market is going up, you have to trade in the direction of that market, right? So if the market is in an uptrend, if gold is in an uptrend, know that the support level is where you should be looking to buy. And gold is in a downtrend, know that resistance level is where you're supposed to buy. Don't say, okay, for the fact that gold is going up and you saw a resistance level above, you now run, say, okay, let me place a resistance, let me place sell, because if gold gets to this level, it will reverse. To your greatest surprise, when gold get there, it might break above it and continue going up, because gold trend most of the time. Gold doesn't move like any other pair. So that is what I want to let you know. If for those of you that are trading gold or that wants to start trading gold, gold is a highly volatile commodity, right? Very, very volatile. So that is why the best thing you can do is to trade in the direction of the trend. Don't ever trade against the trend. So now if you watch this chart clearly, you will see that we are clearly in a 4-hour time frame. And like I said, as a day trader and scalper, I don't place my trade at a 4-hour time frame. I use the 5-minute time frame to place my trade so that I can get a sniper entry, right? And I used the MAEE formula in all my trading strategy, right? I use the MAEE formula. That is the steps that I use to trade the market, which is the market structure, the area of value, entry trigger, exit when you are wrong, and exit when you are right. So this formula has been stuck in my brain, so that whenever I want to trade the market, I walk through that formula before I place a trade. Because in the forex market, you trade by skills. It is your skills that fetch you money. Because once you place a trade, that trade goes, either it goes into profit or it goes into loss. So before you place a trade, you must make so many preparation. So that is the preparation I normally make before I place a trade, right? So now if you watch clearly, you will see that this is clearly a 4-hour time frame, right? And I normally use a vertical line to differentiate the days, because I'm a day trader. right? I use vertical line to differentiate the days, so that let me know that I am trading in the direction of the trend. But the fact that gold goes up and goes down, I want to trade in the direction of the trend. If I see that gold is going up, I'm just going up, and my job is to buy. That is what I will focus on for that day. If gold is going down, my job is to sell, because I know in a downtrend, any up move is a retracement. In a sell trend or in a downtrend, any up move is a retracement. In an uptrend, any down move is a retracement. And you know the leg of a retracement is smaller compared to the leg of a trend. The trend has larger leg compared to retracement. Retracement can move only 30 pips and reverse, and maybe you have a target of 60 pips as your take profit, and the trend will just move 30 pips, and you're waiting for it to get to 60 pips so that it will hit your take profit. It will just reverse and start going up. But you know the main trend can go 100 pips or even 200 pips. You see how it works. So it's better you follow the moving trend. If you are traveling, you need to enter the trend that is moving fast, not the one that is crawling, so that you get to your destination. You know where you are going to. That is why it's advisable you trade in the direction of the trend. Do not ever trade against the trend. I'm just telling you, if you want to start trading gold, because gold is so profitable that many people are making money in the forex market using gold, because gold is always trending. Gold is always trending. I must be sincere to you. Now look at the 4-hour time frame. Look at the 4-hour time frame, right? So you see this line are different days. So this yellow one is week. That is the first day of the week, which is Monday. So this yellow line, this yellow vertical line. So this yellow vertical line differentiates the week. So if this is 1 week, 2 week, 3 week, but this is Monday, right? So other one is days. You see how I use it? This is what I'm going to do. I will map all of them so that I will know what I'm doing. Now this is last week Monday, right? This is upper week Monday. This is upper week Monday. So the 3 week Monday, 3 weeks ago, you can see that the market was clearly in an uptrend. You see the market is clearly in an uptrend, right? So last 2 weeks, you can see the market is also going down and going up. But last week, you can see the market was clearly in a downtrend. From Monday till Friday, the market is clearly in a downtrend. So once you watch this, you understand the movement of the market. This will make you to prepare yourself. So what I normally do, after checking this in a 4-hour time frame, right? Now let's assume this is last week, right? This is, let me just use last week for instance, because this is where the price closed. The price closed there on Friday, right? So this is last week. From here, this is Monday. This is last week, right? Now I enter the market, right? And let's assume I want to trade on Friday. I enter the market and I looked at from Monday to Thursday. I entered the market on Friday, which is this is when I entered the market. This is Friday. This place is Friday, right? So this is Monday, this is Friday. This is the beginning of Friday. This is the beginning of Monday. So when I wake up, I look at the 4-hour time frame. Then I now look, I see that since Monday the market has been going down, right? It's making a lower high and lower low. This is a lower low, this is a lower high, this is a lower low, this is a lower high. So for the fact that the market is making lower high and lower low, I cannot say yes, the 4-hour time frame tells me that the market is in a downtrend. Yes, the market is in a downtrend. I will say, okay, I'll write it down on a paper. The market is in a downtrend, so I will only be selling. After confirming the 4-hour time frame that the market is in a downtrend, I will now move straight to the 1-hour time frame. I will zoom my chart again so that I will see it clearly. I will zoom my chart again, confirm. Now I'm in the 1-hour time frame, and the days are still showing there for me. You can see the day that I entered, and I still confirm that yes, the market is clearly in a downtrend, right? The market is clearly in a downtrend, giving me second confirmation that the movement of the market is down. And I'll write it down again, right? I'll now move to the 15-minute time frame, right? I can now see that the market is also going down. So for the fact that I have already confirmed the movement of the market using the 4-hour and the 1-hour time frame, I've already confirmed that the market is clearly in a downtrend. So what is the next thing for me to do? I will now look at the area of value. So for the fact that the market is clearly in a downtrend, I can use either a moving average or a trend line for my area of value, because the market is clearly going down, right? I can use a trend line and a moving average as my area of value, and I can also support it with levels, either support level or resistance level, that we call it key level. So what I'm going to do is this. I'll go back to the 4-hour time frame, zoom it. Okay, no, zoom it well. So now I've zoomed the 4-hour time frame. I'll plot out my trend line and map from the Monday, right? So this is the trend line that I've mapped out. You see how the price is respecting the trend line. So I'll map out the trend line for Monday. So now I've mapped out the trend line. I've mapped out the trend line. So if you watch, you see that I already implemented my moving average. This purple line is the 20 exponential moving average, and this white is the 200 exponential moving average. And you know that whenever the price is above the 20 moving average, it means the market is in a strong uptrend, right? And whenever the price is below the 20 moving average, the market is in a strong downtrend. But whenever the price is above the 200 moving average, it means the market is in a long-term uptrend, right? That means the trend will go far, will go up. That is what it means, right? And whenever the price is below the 200 exponential moving average, it means the market will go down. It will sink down. It will travel. It will go far, right? Now I've already confirmed the market structure. Now I'm looking at the area of value. So I will use the moving average, which is the 20 exponential moving average, as my area of value. The same thing with the trend line, right? So I will use the trend line and the 20 exponential moving average as my area of value. So whenever the price touches the 20 EMA, right, I will place my sell trade, because I'm only selling, I'm not buying. So now I've drawn my trend line, and then I'll now move down to the lower time frame. First I'll go down to the 15-minute time frame. I will now zoom it so that I can see it clearly. Now I'm in the 15-minute time frame, right? So you can see this is the day. You can see my trend line. You can see the trend line that I drew at the 4-hour time frame. You can see the trend line. So the trend line now rhymes with the 200 exponential moving average at the 15-minute time frame, right? So because I know that whenever the price comes to this area of value, it will definitely reverse, right? Whenever the price comes here, it will definitely reverse, right? So now what is my sniper entry? I want to see a rejection at this area of value. I want to see a real confirmed rejection. And what will define that confirmed rejection? When the price crosses below the moving average. So that is how I trade crossover, moving average crossover. You see the calculation with this strategy. I will not get false signal, because I'm trading in the direction of the trend, right? Because according to everybody knows it, that the moving average crossover strategy works during a trending market and it doesn't work during a ranging market. So with this, I've already confirmed the movement of the market, and I cannot trade the crossover with confidence, right? So now I have drawn the area of value at the 4-hour time frame, and this is it blue? This line you are seeing now, this blue line you are seeing now, is the trend line that I drew at the 4-hour time frame, right? And so the 200 exponential moving average is now acting as a resistance level for me, right? So you can see that the price gets there and then start to range. So what I'm going to do right now is this. I'm looking for crossover, right? I'm looking for crossover. I will now head down to the 5-minute time frame so that I can get a sniper, entry. So I'll just go straight to the 5-minute time frame, right? I need a sniper entry. So I'm looking for crossover at the 5-minute time frame, right? And remember that I trade gold, right? Note that this is gold. So now we are at the 5-minute time frame. We are now at the 5-minute time frame. So now you can clearly see the area. This is clearly an area of value visible before your eye, and you can also see that this level is so powerful that when the price gets there, it reverses, right? So this is the beginning of Friday. This is the beginning of Friday because I've already mapped it out. So I can't wake up as early as 1 a.m. because of trading. No, nah, I have to sleep. So I normally wake up in the morning 6 a.m. Nigerian time. I wake up 6 a.m. in the morning Nigerian time. That is when I normally start my trading. So now I'll not take this for you to understand what I'm talking about. So if you make the calculation, you see that 5 o'clock. This, if you see that this is 5 o'clock. Sorry, this is 5 o'clock, right? 10th November 2020. This is 5 o'clock. So in Nigerian time, this 5 o'clock means 6 o'clock. It looks like this is GMT because it's like 1 hour below Nigerian time. So this 5 o'clock means 6 o'clock in Nigeria. You understand what I'm talking about? This 5 o'clock means this 5 o'clock. This 5 o'clock. This is the 5 o'clock I'm talking about. Okay, let me copy the course down. This 5 o'clock. You see what I'm talking about? You see where the 5 o'clock here? This 5 o'clock, 10 November 2023. I hope you are seeing it. So this 5 o'clock means 6 o'clock a.m. in Nigeria. So this is the time I woke up. So when I woke up, I'll now go to my chart. So now for the fact that I've woken up at this 5 o'clock, which is, let me use another horizontal vertical line to show you so you understand what I'm talking about. Okay. So this is when I woke up. This is when I woke up, 5 o'clock, which is 6 o'clock a.m. in Nigerian time. This is when I woke up. You can see the yellow line. This is when I woke up, right? Which is 5 o'clock, which is 6 o'clock a.m. in Nigerian time. I woke up. Then when I woke up, I now opened my laptop and then look at the chart because clearly the higher time frame have told me that the market is in a downtrend, and I've been able to plot out the key level at the higher time frame with this trend line, right? So what I'm going to do right now is I will now open the 5-minute time frame and then think of where I'm going to place my trade. So right now I've woken up at 6 o'clock a.m. which is 5 o'clock GMT. Then I woke up. So when I woke up, I now look at the chart. I woke up. This is when I woke up, and I look at the chart, and I saw that this is this is the area of value. This is the resistance level where price is expecting, because if you watch, the price came here, rejected, came here before it now broke below the 20 exponential moving average. So the price could not get to this area of value again because this is the smaller time frame, which tells you that the down move is so strong. The down move is so strong. So what am I looking for? I'm looking for a crossover, right? So once I see a crossover, I'll confirm that the movement is strong. So now I can see a crossover, right? So this is the movement that I've seen. So this is a crossover, right? This is a crossover. This is a crossover. So if you watch, you see that the down is more strong. So for the fact that the price crosses above, I cannot buy because the movement is too poor, right? If the price crosses above the 20 exponential moving average, I cannot buy because the movement is so small. Look at it, just went small and comes down, right? So what I will do, for the fact that the price is clearly going down, I will target sell. That will be my target. I will target sell. So now that I woke up here, right, and I've already seen that the price has already crossed below the 20 exponential moving average. So from here, I've already seen maybe the crossover happened in the midnight. Maybe yes, in the midnight, that's when the crossover happened. The crossover has already happened. The price crossed below the moving average, right? And so I woke up here. So what I'm doing right now is I'm waiting for the price to touch the 20 exponential moving average, which would trigger my entry. So now that the price is at the 20 exponential moving average, this is an area of value for me to place my trade. This is an area of value for me to place my trade. So I'll wait for the candlestick that will touch this 20 EMA, right? So I'll be monitoring the chart. So once the candlestick, like this candlestick now touched this 20, this purple line, right? When the candlestick now touches it, I will now know this is my entry. So I now placed my trade. So this is where I placed my trade because it has touched it. So you see at 1957, I'm just trying to show you how I made over $20,000 on Friday. Honestly speaking, I made over $20,000 on Friday. I risk only 40 pips and made over 200 pips on Friday. So I'm just showing you for you to understand how powerful this strategy is once you master it. So now this red horizontal line is where I place my trade, because I waited for the price to touch this purple. This is when I woke up and I was waiting for the price to touch this purple 20 EMA, this 20 EMA, this purple line 20 EMA. So when the price touches it, I immediately place my sell trade. So I place my sell trade here at 1957.56. Then my stop loss is 40 pips above it. So 40 pips will be 61.56. 61.56. So you see that my stop loss is above the main okay, 56. All right. Okay, so you see, so you can now see that my stop loss is above the trend line, because I believe that the price can never get to this level, right? Even if the price goes up a little, it will reverse from this trend line. That was my hope, right? So I now place my stop loss 40 pips away from my entry, because I entered at when the price touched the 20 EMA, this purple line, right? Now this is the powerful thing about this strategy, right? I have two entering. I enter with two trades. I don't enter with one. I enter with two trades. So the first trade, I have a target of 50 pips, right? I have a target of 50 pips or 40 pips, which is normal one-to-one risk reward, right? I have a normal target of 50 pips, so that in case if the price doesn't go far, definitely it will get to 50 pips and I will cash out. And so when the price goes to 40 pips in profit, I'll break even, right? When the price goes 40 pips in profit, I break even, right? When I break even, it means that I will not be panicking again, because even if the price reverses, it will hit my break even. So now for the fact that I've placed my sell trade here and the price made a pullback again and started going down, right? Made the pullback, started going down. So when the price gets to 40 pips, because my 40 pips was my stop loss, so I'm looking at 40 pips in profit as my break even. So if the price goes 40 pips in profit, I'll break even, right? And when it goes 50 pips, it triggers my first take profit, which is 50 pips. Then the second one I will hold, waiting for crossover, right? So that one I will hold, that one waiting for crossover. So what I will do is I will be trailing my stop loss. I will be moving it as the moving average is moving. I will be following it. So now for the fact that the price is going down, so the price now went down. So the price now went down. Let's do the calculation. Where is 40 pips? 57. 40 pips will be 53. Yes. The price got here. This is where the price got to. Then I broke even. So when the price was here, somewhere here, right? 53. Yes. When the price was somewhere around 53, which means I'm in 40 pips in profit. Just 10 pips for me to get my first take profit. So once the price is at 40 pips, I will not break even. How do I break even? I'll take my stop loss to my entry. I'll add extra 10 pips, right? So instead of me placing my stop loss at entering, so that when the price comes, it will hit it, then I will lose maybe my commission, because I have to pay for commission. So I have to recover my commission in case the price goes against me. So what I will do is, for the fact that the price has moved 40 pips in profit, I will now take my stop loss and put it below my entry. So it should be like 5 pips, right? 5 pips. So it should be, now it's 57.50. It should just be 57.00. 57.00, right? Yes, somewhere here, or 56.90, somewhere here. So somewhere here will be my break even. So you can see it now. This is where I broke even. So this is my stop loss. I now broke even. I put my stop loss. Sorry, my stop loss was here, and this is my entry. So I took my stop loss and put it below my entry. So 5 pips below. So if the price goes back again, it will trigger my stop loss and I will gain 5 pips profit, right? Half bread is better than none. After all, I've gotten half bread is better than none, right? I hope you understand what I'm talking about. Half bread is better than none. So I will now put my break even here, right? Just maybe 5 pips or 6 pips or 7 pips below my entry. Then I will now relax in confidence, knowing fully well that even if the price reverse, it will just hit my break even. So now the price now went down again. I entered 57. The price now went down to 53, 56. Yeah, this is where the price triggered my first take profit, right? I made 50 pips because I risked 40 pips and I made 50 pips in my first entry. So the second one, I decided to hold it. So the only way I take it is when I confirm a crossover. So where do I confirm the crossover? I confirm the crossover at the higher time frame, which is the 15-minute time frame, right? Because that crossover is so strong. I prefer 15-minute crossover. So that is where I will take my profit, because sometimes the 5-minute crossover will not be that strong. So where I can get a strong crossover is at the 15-minute time frame. So for the fact that I've gotten my first take profit, right, I will now head straight to the 15-minute time frame and will be waiting for a crossover. So I'll now come to the 15-minute time frame. So this is the 15-minute time frame. So I'll zoom it so that you see it clearly. So I'm now at the 15-minute time frame, right? So I entered 1957. So the price got to 53 and triggered my first entry, right? So this purple line is a 20 EMA, and this is that trend line that I drew at the 4-hour time frame, and this is the 200 exponential moving average, right? So now I've taken my first take profit at 53, which is 50 pips. Sorry, 50 pips should be 52. Sorry, 52, which is 50 pips. I've taken my first take profit and I've already broken even, right? So what I will do is I'm waiting for the price to cross over so that I can just close the trade. So that when the price crosses over, I will know that retracement is about to start. But this is clearly a downtrend. So when the price crosses over, I will know that retracement is about to start, because if you watch, this was clearly a retracement, right? The main trend is downtrend. So this movement is purely a retracement move, because I'm looking at the higher time frame. So at the higher time frame, or 4-hour time frame, this is just a retracement move, right, before the downtrend continues, right? So whenever the price goes above it, I will know that retracement is about to happen, and I'll take my profit immediately, right? So and once the retracement is over and the price breaks below the moving average, I'll place my sell again. Like now, since maybe this is where I bought the price and the thing went down and then crossed. So when the thing crossed here, I might take my profit here, right? Because I know it's about to go. So I might take my profit here, or I might take my profit here. Because if it goes up again, it's retracement. So I'll wait for it to come back again. If it comes back again and breaks below the moving average, I will place another sell trade again. You understand what I'm talking about? So what I'm waiting for is price to break above this moving average line, right? So for the fact that price has not broken it, I'm just following this 20 EMA. As the price is moving, I'm just turning my stop loss. So the price now moved down here, and this 20 EMA, this price now moved down. So this 20 EMA moves with it. So I'll just be shifting my stop loss. That's we call it trailing stop loss. I'll be trailing my stop loss. I'll move it a little. I'll wait again. If the price goes down again to this point and this EMA moves back again, I will make sure that maybe, for instance, this is where the EMA line stopped. Just like it stopped here. Maybe this way the thing stopped. The EMA line stopped here. So I'll just move this thing a little bit here. So if the thing goes up and hit my stop, I will know that the thing has reversed, yeah, right? So I will be following this EMA slowly, right? So if the price goes down to this level again, this EMA line will move down again, and I will now take my stop loss. I will move it down again little by little. What I'm waiting for it to break and hit. So it moved down again to this point. It moved down again to this point, and the EMA line moved down again. And what happened? I took my stop loss. I moved. This how I've been moving. I was moving my stop, because when the price it just retests the 20 EMA and continue going down. Whereby some people that have not entered the market can enter the market at that entry. Like if I want to enter the market again, I want to enter another trade, right? If I want to enter another trade, I wait for the price to make a pullback to this 20 EMA, because I can still clearly see that the market is in a downtrend. So if the price makes a pullback to this 20 EMA, I may place another sell trade, right? So this is where other traders can place their trade. So you can see that the market broke below this this support level, right? You can see clearly that what I told you about gold. Gold is too powerful. Now this is this is clearly a support level, but what happened? The price broke below it and continued going down. So I believe that some people that placed their buy trade here were stop out, because I know some people who placed buy trade here, those people were stop out, because this is clearly the support level. The price broke below it and continued going down again. That's why I say in a downtrend, forget about support level, just trade in the direction of the trend. So I keep on trailing my stop loss, till the price got here. And like I said, I normally close my trade before the day goes off, because I'm a full-time day trader. So I know that the trade normally closes by 10 o'clock Nigerian time, right? So I won't wait for 10 o'clock. Maybe once it gets to 9 o'clock, I'll just manually close my trade, because the market is still going in my direction. But once it's 9 o'clock, I'll manually close my trade, because the moving average has not crossed over. I'll just manually close my trade, because I don't hold trade till daybreak, right? So for the fact that the price refused to cross over the moving average, it means the downtrend is still strong. So that is how I've been trailing my stop loss. I trail my stop loss till to this point. I trailed my stop loss till it get here. This is where the last place that my stop loss was. Yeah, just 20 pips above the EMA line. This is how I do the calculation. Let me show you the calculation. So now I measure the last point of the EMA line, which is here. This point, this is the last point of the EMA line. So I measure the last point of the EMA line, and I calculate 20 pips, right? Because I know if the price breaks above the 20 EMA line, goes 20 pips, it means that the price have changed direction. So now if you watch, see that the line is 1937. So 20 pips will be 1939, 1937. Wait. 1937.70, right? That is where the EMA line stop at, right? So I will not calculate 20 pips above. So 20 pips will be 1939.70. So I will not take my trailing stop loss to 1939.70. Okay, let me just do so that it will not confuse me. 1939.70, right? So this is where my stop loss was. The last point that I moved my stop loss was 1939.70. Why the EMA line was at 1937.70. Why the lowest that the price went was 1932.85, and then it makes a retracement up here and started going down again. So now I now check the time, and if you watch, 20 o'clock means 9 o'clock in Nigerian time. So this is 20 o'clock, right? This is 20 o'clock. So 20 o'clock means 9 o'clock in Nigerian time, right? This is 20 o'clock. And remember, I make use of Octa FS. So that is what I trade. I trade the Octa FS market. That is what I trade, Octa FS. So Octa FS on Friday, they closed by 9:45. That is when the market closed. 9:45, which is 20:45. That is when the market closed on Friday, right? So for the fact that the market now, for the fact that I know the market will close by 9:45, since it's Friday, I had to close my trade before the market closed. So I closed my trade. I had to close my trade at 20 o'clock, which is 9 o'clock. So this is where I closed my trade. So this is the point where I closed my trade, 20 o'clock, before the price now closed at 9. That is at 20:45, because this is 15-minute time frame. So the market closed at 20:45. But before the market closed, I've already taken my profit at 20 o'clock, which is 9 o'clock in Nigerian time, right? So I now took my profit at this point. So now I just placed only 2 trades from morning till night. Only 2 trades. That is what I placed. So my first trade ended up in a profit of 50 pips. I made 50 pips in my first trade, and the one that I hold, let's calculate it. Let me not exaggerate so that you think I'm exaggerating. Let's calculate the pips. So this is where I placed my trade. Let me just draw it so that you do the calculation yourself. So this is where I took my profit at 1937. That is where I took my profit. 1936.14. That is where I took my profit. 1936.14. That is where I took my profit. Now, that is where I took my profit. Now, if you make the calculation now, you see that it is okay. Let's just make the calculation. You understand what I'm talking about? 37. Okay, wait. 37 is 10 pips. 38, 20, 30, 40, 50, 60, 70, 80, 90, 100, 110, 120, 130, 140, 150, 160, 170, 180, 190, 200, 210, 220, 230, 240. So I made 240 pips, including the 50 pips that I made, right? So in one trade, because I was holding onto that trade, I made 240 pips. While the second trade, I made 50 pips. So that is how I trade the forex market. That is how I trade gold, and that is how I make so much money trading the gold market. So I believe you have learned a lot from this video. Please, you are not seeing my face because my camera went off, and that is why I couldn't be able to show my face again. So that is where we call it a day. I hope you understood everything about this video. Please, you can go and backtest this strategy, backtest it in your demo account, and then implement it in your real account if the strategy is working for you. So that is all I have for you on today's video. I hope you love this video. If you do, give us a like. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to subscribe, turn on the notification icon to be notified whenever I publish new content. I will see you next Saturday for my next update. Goodbye.